Microphone check and screen share check, please. All right. Good evening, guys. Count at Tortoise Capital. It is nightly strategy podcast for July 19th, 2022. This is the World War I monument in Kansas City, looking over the skyline down to Union Station. This is a commemoration of the veterans, the War Memorial. Magnificent display. Best spot in the city. So if you're a teacher, all I need to say is show me your students' work. If you're a coach, show me your players playing. So Phil Wu and Griff worked their tails off for all of 2021 to upgrade the glossaries, to build note sheets for the foundations course, to take a bunch of the swing and day trading coursework and build detailed Cornell note-taking sheets from that, and just really supported the community in an amazing way. And they documented their lessons learned in the annual research weekend in December 2021. Their learning journey was well documented. So I turned them loose on the Kata Challenge and working up projects for the interns. They continued to do great work. And then there has been a persistent request from a lot of folks who are who use Thinkorswim, and we're looking for a turnkey solution for the RLCO framework and OWL trading in multiple timeframes. So the OWL trading is sort of the conservative approach to the RLCO Bollinger Band framework. It's the pattern that happens after the supported spring crossing, where you're waiting for a little more confirmation before you go. It is a wise trading system and well suited for swing trades. So they have built a bulletproof implementation of a complete trading course using that particular strategy and implementing it on Thinkorswim, which we're now happy to finally, after over a year in development, release to the world. And you can see the links there. We're just announcing it for today. That's the price for the first 20 takers. It will never be cheaper than that. And after 20 takers, it will go up from there. So if you're interested, please give me a shout. Magnificent work by these guys. It just couldn't be prouder of their work. And when you look at the work that they've done on the note sheets and the glossary, and in Griff's work on the Kata 2 challenge, hey, just his work on the Kata 2 challenge is magnificent. He hasn't had a losing week this year. Both super traders, and really commend their work. So I just wanted to put that out there. I posted the links on Patreon as well. Again, that's the price for the first 20. We got some other guys working on their implementations of our work that is geared towards their beliefs and their timeframes and their situation. My contention is that all of these guys that are developing, that are graduates of the training program and that are developing their own systems, are probably in a life situation or point of view that would resonate with lots and lots of people. And so I think it's important to give them a chance to express that in the world. And it kind of demonstrates that when you do the work, you get paid. I want to bring your attention to this work here. So I've been doing a lot of work on creativity and systems thinking and true storytelling, and combining that with my work coaching youth soccer for the last 20 years. And I had a blinding flash of the obvious this week concerning the Buddhist concept of child mind. That one of the things that we want to do when we're learning a new discipline or a new point of view is to develop a child mind, which is the stickiest, most curious, fastest learning organism in the known universe. So what we want to do is unwind some of those constraints and restrictions and critical thinking and disbelief that comes with adult living, seasoned by the world. And we want to develop childlike mind in order to unleash the power of our innate creativity. Well, that's not the only thing that you need when you want to develop children that thrive. And Michelle Borba's work on what are the traits of children that thrive, she's done some magnificent research-based work that has identified these 7 characteristics here. So my blinding flash of the obvious was that, well, what we're trying to do is build child mind in our traders. And I'm actually trying to do that with military officers. So I'm going to use this at the college as well, is that we want to use the principles of childhood education and how to thrive and gear our teachings on trading and decision-making with those ideas in mind. How can I, right from the beginning, build childlike mind and then grow it into a robust, resilient, proficient, self-directed adult professional mind? I need to go through those same stages, but I can accelerate that learning by concentrating on things like exercises that build self-confidence, empathy, self-control, integrity, curiosity, perseverance, and optimism. What she means by curiosity is exactly what we're doing with the creativity course. What we're learning in the true storytelling courses are these integrities and optimism and empathy by appreciating the true stories of others. And then the discipline that we're getting from doing the daily work is the self-control. And then results-based and evidence-based proficiency through doing the daily practice and the histograms is where that self-confidence comes from. And then perseverance comes from committing yourself to worthwhile goals that are important to you and doing your best on them with a social support network and a professional support network that helps you with the perseverance. By committing to that team-based approach in the tribe, you actually are developing the perseverance that it takes. We talk about that at the soccer camp this morning, all for one and one for all. What does that mean, kids? And they say, all for one means that everybody on the team is there to help you when you need it. And one for all means is that you're there looking for ways to help support the team when they need it. That reciprocal relationship is part of the biopsychosocial model of development. There's biological characteristics of our brains that we can tap into and know how to leverage the power of biology. There are social elements of collaborative learning that we can leverage in order to improve our performance, take care of the tribe, and work collaboratively. There are psychological elements that we can use to understand how our own brain works and do things that strengthen our strengths, protect against our weaknesses, and build the kinds of habits that it takes to be effective in the world. So the collection of courses that I've been developing, loosely called the Trader's Mind, are really, it turns out, to be elements of exactly these things. And I'm seeing these qualities in all of the courses and the work that we're doing on a nightly and weekly basis. So I am going to be doing more of this and building this out with a research project with Ohio State University, because we're going to bring this to the Army And we're going to link it with the Fletcher creativity that we're working on in Creativity 202 and Boji's True Storytelling from the True Storytelling Institute, which is how you get the social connection with the tribe and how you get collaborative learning and you build out resilience and integrity and emotional resilience. When you add in the technical elements of trading, now you have a complete biopsychosocial model of whole person development that I'm really excited about. So the research project I've been working on with Dr. Fletcher and a couple of his grad students that are doing dissertation work on this, and we'll be rolling this out. So I'm pretty excited about that. Just wanted to share that with you. Just while we're here, I had to, I wanted a hat tip to this gentleman. So Nobuo Miya, he makes handmade iron kettles in Japan that are only used for boiling water. And he was just talking about his craftsmanship. And he says, yeah, I started when I was about 20. So I've only been at it for about 50 years in that typical laconic way. And he says, you know, of course we're a business, so we need to make products that sell, but we don't create products that don't meet my standards just so that we can sell them. Anybody can create something that sells quickly. And the commentary underneath the YouTube, I thought was really instructive. This echoes a point that we make in the Creativity 202 course. This guy, Pico Iades, said he notices that when the Japanese craftsmen talk about their experience, they speak about decades of work and knowledge as if it was almost insignificant, like they are still beginners. Miya-san included, he says in the beginning of this little 10-minute video, he'd only been making kettles for only 50 years. It's the kind of humility you see with people who have achieved master level expertise. These are guys who know they're never going to come close to knowing everything, so they don't pretend to, versus noobs who learn one or two tricks and then act like they know it all. So there was some long discussion, and this guy, a young person, I think, Ultimate End, said, yeah, this is not a big deal. Remember, in the end, they're just iron kettles. And this connects to one of the lessons that we made in the hybrid course and we learned through COVID and is in the foundations course, the power of a single word to make a difference. So I want you to study that phrase. In the end, they're just iron kettles. And if you just get rid of that word, just, that sentence reads, in the end, they're iron kettles. And that's what the craftsman would say. He would not disagree with either one of those. He would just say, they are exactly iron kettles. And that's all they are, but they are crafted iron kettles. They are exactly iron kettles, nothing more, nothing less. And so the use of that word just is almost to discount the importance of the thing. Oh, it's just an iron kettle, as if that doesn't matter, as if some things matter and other things don't. The iron kettle matters because it is an iron kettle. Think about how that sentence sounds if you say, well, in the end, he was just a good man. And how does that sound when you change it to read, in the end, he was a good man? And if you put the word just back in there and you use it in a non-pejorative way, you say, it was just an iron kettle, nothing more, because that's all it had to be. That's all it was intended to be. That's what its purpose was. So some of the smaller traits and discoveries and achievements in our lives seem like they're small and insignificant when they really are everything. He was just a good man, or he was a good man. And you could even then come back and say, he was just a good man and nothing else. Well, that's something to aspire to be a good man, to be an iron kettle, and to be one who can craft that with all the ways it can go wrong in this world, and still to be able to craft that iron kettle just so. Don't neglect those small arts and the power of craftsmanship. So that's what I wanted to say about that. I was really struck by the connection of those ideas to what we've been talking about in the creativity course, in the hybrid course, and the craftsmanship that we're trying to bring to the trading practice. I think that stuff's important to work. I use the, just for a change of pace, I'm using the simplified chart, the sniper simplified chart for the daily health check, just to see what we can see. And so I'm noticing the kata 2 qualities that we have here. We talked about this yesterday, and why it was important to see what would happen today, to see if that RL10 was going to move up or return back down to here. We made the argument of why this was really so vulnerable. And the vote today was up, and it took out yesterday's high, and it pushed through the top of the dragon and the RL10, and closed well at the top, and is halfway back up the stack to the 30-day high, which is the next test back here. And there's the peak of the dragon. There's the peak of the RL10, which is also the 30-day high. And there's that key price level psychologically of 400 in my view. So this is one more day's momentum to break out from there. And then that clears the 20-day high. That's a pretty important price level around 392. And can it get through all this and go? The downside is still there to be seen, but climbing that wall of worry today was a vote to the upside, and for no apparent reason, but we'll take it. All right, here's the S&P up today in the indexes, up 2.7. The Qs were better at 3%. The Russell was best at 3.5. The Dow lagged a little bit at 2.4. Emerging markets lagged at 1.65. And then below the cut line, treasuries gave back 0.5% at 114. So really, it was the speculatives in the US market responding nicely today. All right, let's start with the ones that underperformed first. And there were only a few in the sectors. So again, the S&P here. So we had real estate up 2.5. This cluster all in the green, but significantly underperforming. Oil, Brazil, defensive staples, Aussie dollar, lithium, blended commodities, wheat and precious, Mexico. Here's the zero line into the actual losses now. VXX at 0.27, food off 0.6, closing in vicinity of 20. That's still an important price level. Rivian off a quarter. Tesla and Microsoft and Apple all underperforming the S&P, all underperforming tech. So that was the only disturbing feature for me, that even though they were up nicely, and that's a lot of money to move companies that big that far, but still underperforming the S&P and their sector. So that was a cautionary note in this bear normal market. But that leaves a lot of things outperforming today. So let's look at those, starting with the sector. So a baseline of sectors here: finance, clean energy, materials, tech, consumer discretionary, up to 3%, between 3 and 3.06. Energy, the FANGs, lumber, 3.5%. Marijuana, commercial real estate, oil exploration, and ARC innovation, up now to 4.16. The other lumber, 4.65, and biotech, 4.5. So that's starting to get to be a significant improvement over the market and over tech. Robinhood, that should be just a symbol. ARC Genomics, this is actually a good thing for ARC when their genomics is better than a strong performing S&P sector. So 5.2 versus 4.5, that's a plus to the ARC there. And ARC Innovation doing better than the tech sectors. That's a good thing for ARC. Then all of the crypto, so you get blockchain, Ethereum, Bitcoin, global future of finance, and then the blended large cap crypto. Then individual companies that did well: Coinbase, 12%, Cliff Natural Resources, 6%, PayPal, 4.8, Devon Energy, 4.7, Squarespace and US Steel, 4.5, Alcoa, 3.4. So quite a nice range of things that all benefited. This looks like a combination not only of sector buying or market buying in the US, but also key sectors that are outperforming. And 5 of them were very strong today. And all pretty aggressive. So lots to choose from for tomorrow. Let's look at the reports. Start with the sniper trade of the day. And let me make that a little bigger to see. So this is the SPY itself, because this was a market phenomenon today. And then the key sectors got piled on. So this was market and sectors that got the work done today. So here was yesterday's disappointing sell-off that closed poorly. And now here was the gap up that was retained. So that's the low of the day. So this was the size of the gap that was supported the whole day. It never came back and tested that. And what's important to me was that this opening right here was well above these 2 statistical levels in the yesterday's RL10. So the fact that it gapped above there and never got back down in here tells me that there was like some clear, strong support in this area for a continued move. And you saw that last all day, and it never really looked back. What I was looking for as this was starting to proceed up the stack was what would happen at this price level. And so this was an area of real interest for me, and it voted strongly up. When it rolled over, I exited and then caught a 2 resumption. It kept going, so that was fun. So that's the notes that I want to make for tomorrow. Then I would say, if this thing gets above and stays above this 392, or call it 393, that's going to be a very favorable indicator. And then I would say this is a strong area of support because of all this, which held and supported more buying. And then, excuse me, and then yesterday's or today's low, in order to protect against that sell-off to lower levels. So this whole area from 382 to 385, that's about a 1% region. This is like a thick skin that should act like a springboard if we see this move continue. All right, so we had the strong gap up. Here was your quick kata 2. There's a support. There's a support. That's darn near an emerging dragon. Or if you got it in here, that's a kata 2. I would take that as a kata 2 or emerging dragon. Standard risk box of $1. That's your R10 is like 93 cents. So I just round that to $1 for the R10 risk. So standard risk, this thing moves up. This was a potential for a second entry here because it had cleared that key price level from yesterday. And notice that RL10 barely budged and resumed. That's really a favorable, that's not even a decay in the RL10. So that was a legit second entry because you got an R in hand and momentum and just cleared this as an emerging dragon. I elected not to because of the span of control. I had other things already going on. And that was an orderly exit with the PSAR. Was happy to take it. Was prepared for it to come back here and test. And if it violates here, it would be a thunder run back to the downside. But it immediately reversed. So I'm back in as it made a new high of the day. Was still clearing this standard risk box. It mucked around, gave me a micro move. I was ready to take that. It felt like it was starting to run out of gas. Like the steepness of this move, it only had half of that move. And I was fully expecting this to fail, but it didn't. It gave me another kata 2. So standard work, standard exit. And that was pretty good for the day. So I felt like I was aligned with the market, like riding that train instead of fighting that train or racing that train. I was riding that train. So that was the sniper trade of the day. Still bearish normal, so I'm not carrying that risk overnight. I want to see this get above 400 before I do that. All right. We've seen the health check. Oops. Let's get back to this. So we're still in bearish normal. This powerful move of the last 2 days, that's a good thing. Made us better on the short term. Still underwater a bit here on the longer term. The risk Z has still been a reliable early alert that this thing has upside potential. We're not even at Z1 yet, so there's still more room for this to go. So risk on. We're back under single digits with respect to the 200-day moving average. 7% away from sideways. So if it gets up to like 2%, more like 8%, I suppose, then that's where this goes from bearish to sideways. This is a warning that the bounce of the last couple days has put these at risk of being a dead cat bounce in a bear market. So we're going to respect the fact that we're in bear markets and that this rebound, while it has been nice, has now put these at a place where they are vulnerable to another leg down. So we're going to be mindful of that. We're noticing the min pain trades: McDonald's, Home Depot, United Health, Dow, and Boeing. Still some weakness in Pfizer, Johnson & Johnson, Alcoa. Travelers is not participating in the strength in finance. Dow tactical summary, starting to be a little bit worried about the bear market rebound. So that's why you get those alerts. Only a couple dojis today. Just a few symbols that are still well suited for the auto framer: IBM, Pfizer, Travelers. No other swing patterns worth noting. In the ETFs, again, the warnings about potential dead cat bounces. So we'll be mindful of those. Only a couple dojis. Gold is still 11-1. Brazil 2-1. Utilities starting to lag low. So our defensive plays are failing. Silver, gold, treasuries. Mexico couldn't hold. It gave back some of its gains. Wasn't much, but it was slightly negative on a day when the rest of the market was crushing things. So we got to be aware of that. Some 10-day high breakouts. All of these that are above 100, those are breakouts from their 10-day high. So we would be well suited to look at, tech broke through its 10-day high and its 1-month high. That's nice. So that's how you read that. In the auto framer, just a few now. This used to be a large number. This is just a few that are above 2-1. Brazil, Pfizer. I even think IBM is interesting here. Might need to go take a look at that. And Travelers really lagging behind the finance sector. When you do get rebounds out of the bear, then it's not unusual to see fewer and fewer things testing out well as things get back closer to their 10-day high. That's why you're not seeing as many symbols in this. So that's almost a seasonal aspect. Daily pinches. Tesla still was kind of a pinch. Procter, Staples, Walmart is always interesting to me at 2.2-1. So this was not a runaway upside today. So there may be more in that on a follow through. In Sniperland. So the recovery of the last few days means that there's not a lot of Godzillas because you're getting some stronger moves off the bottom. So only NRG, only one in the entire S&P 500, NRG. None in our tactical symbol set. A lot of the ones that were raging to the upside today were former Godzilla candidates. So if we're, so we want to give some respect to Godzilla from last week. On the other hand, now we're starting to see more fireworks and popcorns. These are all quiet moves ready to explode to the upside. A increase in the number of fence sitters that have now moved up into the midpoint of their trading ranges. Conagra was big today, or big 5 days, but very quiet today. So that has potential. RTX, strong 1-day move. Like to see that. There's the quiets and the most volatiles for you to scan for your favorite patterns. the sniper and auto framer stats for your reference, and the sniper stats for the tactical symbol set here, and sorted by the 5-day Z-score descending. So Ethereum, Wood, all the Bitcoins. I like finance right here is starting to stretch its legs. It was horrible on the long term, but is actually pretty strong over the last 10 days. So that's a good thing. I like the super quiet things down here, Genomics and Biotech. I really like that. That allows for intraday moves that you're going to see today. Why I like trading the quiet grinders. My brother talked about that yesterday, why that's a good thing. And quiet grinders are things you want to hitch your wagon to. That's not a bad idea. So you see Microsoft, Tesla near the bottom of this volatility stack. I think that's a good thing for them. That means there's no panic selling, but there's no runaway explosion to the upside either. IBM and Johnson & Johnson stand out for the inability to participate in all the good news. So that's a divergence that's important to notice and maybe is tradable. By the same token, almost everything was awesome today on the ETFs. So it's hard not to love everything right now. This little rejection was reversed back to the upside and made a higher high. So now this thing is clearing that key 390. And now it's just that one little piece here to get above 400. And then this whole thing looks like a bottoming process that has lasted, 25 or 30 days of brutality. But there is a slow and steady improvement in that 30-period slope. And there's like a Kata 2 improvement in that slope. But we're getting close to key resistance levels here. So the last time it came up here, you get that sharp sell-off. That's what happens in a bear. You get just a nice little recovery that lulls you into sleep, into a false sense of security, and the bears come in and smash it down. So this little recovery, while it's nice, is now posturing it for a potential dead cat bounce and then a reversal. That's what those red lights on the swing trades are warning us to be mindful of. So we are not out of the woods. We are in a bear normal market. This is normal backing and filling behavior, but that's also what bottoms look like. Let's go to the charts for some sniper trades today. We already saw this one. Just to get that out of the way, this is how the S&P unfolded. Nice big gap up, held support, Kata 2 or an emerging dragon breakout, broke through that key resistance level, but then pulled back. I took the orderly exit for an R. Kata 2 reentry, half an R. Kata 2 reentry, half an R. So about 2R on the follow through. A healthy contribution from the gap. The more important thing was that it held. So I like that. So that's the S&P. All right, here's Cliff Natural Resources, the steel company, CLF, has a nice gap up, breaks through the descending PSAR. So I buy it one risk box off the bottom. It starts rolling up, and I get out with a no lose plus dinner for 2, no follow through. Kata 2 reentry, standard risk box, check or hold. About a 1R standard exit coming back through the dragon. That's about a 1-2-3 entry with a bad fill. I mean, a 1-2-3 exit with a bad fill. Or I was late, more likely. So here's what that trade looks like up close and personal. You had the nice strong move that terminated in a 1R. It reversed, crossed through the dragon. Here's our reversal in the RL10. This is, we call that in the pocket right there. If you buy it above the hump of this RL10, then it's an emerging dragon. If you buy it here in this little pocket, call that a K2. I like that the dragon continued up. That's good. It's working its way up, gets this nice peak move. The RL10 crosses the baby dragon, so that makes this a 1. You get a lower low. That makes this a 2. When it falls below here, this would be technically the 1-2-3 exit level. I gave it to about the spine of the dragon and was happy to take that little move, because if this is 1 unit of risk, that's about 1 unit of reward. That's about 1R. Check or hold. What would we call that reentry? Caught a 2. Here's the swing low, higher low. The RL10 holds. It crosses the baby dragon, enters the dragon, crosses the spine, leaves the dragon, hits the descending PSAR right in about here. Standard entry, standard risk box. You would set your execution stop right there, so you're really only risking this much of that box. Like, you don't hold past here, because now you're into the land of the collapsing dragon, and you want to be short from there. Technically, you could even go to the bottom of the dragon here and treat that as a collapsing dragon if you wanted to be aggressive. I wouldn't fault you on that. So the point is, with either one of those triggers, you're not going to stick around for a full minus 1.0 loss. Okay. You're either going to take this from the bottom of the dragon or this from the bottom of the RL10. Check or hold. What I'm wanting to see really is this, when this RL10 peak, see how that connects to the PSAR flip? This is the tactical trading space in here. If it gets above this, then that's a good thing, because it has cleared the previous statistical hump. So this is actually front running that decision, but why not? I'm already only risking either half or a 0.7 anyway, and I'd rather make that. And if it gets through, then I'm going to quickly get my stop up into here so that I can lock in this gain. Then as it's going up, I'm moving to lock in the gain and giving it just this much wiggle room. And then as soon as I can, I'm going to raise that stop, like to here, or get it above there, and then lock in that whole piece even better. Then I'm looking like this. And then I think of that as free and clear because it's above the peak of the RL10. Standard trade management. That is just basic blocking and tackling right there. I took this to be a healthy sign right here. I saw this as a healthy sign. The fact that it didn't come into this little comfortable PSAR protection zone. And again, that was that trigger, that execution trigger. And even the belly of the dragon didn't get violated. So the fact that it stayed above both of those was a good thing. The PSAR starts accelerating. This thing, once it gets above this RL10, this is where I'm starting to breathe a sigh of relief, like right there. And I said, well, I could have thought of that as a second position, but had span of control considerations. And I'm just happy with this, with one. Standard exit, check or hold. I'm going to keep showing you these till you just get sick of just capturing that move. Why not? If you were ever going to be short on this thing, that's not a bad shot to the short side. I would not be offended by that, because you could take that standard risk box and draw that in here, and you have the high and a lower high and sort of a collapsing dragon, and then a 2-to-1 just down to here. And if that fails, it's going to come down to here. So there's a potential 4-to-1 on that one. But today was such a massive up day and the metals were working. I was content to stay on the long side of the trade and give this back. And then there's I consider that a kata 2. The only thing I might say is the fact that this got a little bit lower was troublesome, but then the PSAR flip box was so small and it did not fail that 4-to-1. And it was close. It was so close to the top that, man, this could go. To me, that's a kata 2. My risk box my execution stop would be like right there. So I'm really only going to risk that much of the full box. So that's like a 0.5 risk. But it's the standard position size. The position size, the number of shares from here, the first 3 trades, it's the same one. But my risk is already in half because I'm already committed to getting out at 0.5. Scratch. Feels like it's done. Missed a kata 2. And it was getting into the afternoon. So felt pretty good about that one the whole way through. Cliff Natural Resources. This one is Devon Energy. PSAR flip box in the usual way. Standard entry, 1 risk box off that low. Energy was just smoking hot, strong today. There was strength in all of the energies. So at this point, I'm like about here. And then it just kind of petered out and came back and hit the PSAR. Missed the short. That commitment to the long side. But That means I was sharp and ready for the Kata 2. So you got a +1 trade already, higher low, breaks through, execute off of here, but treat the whole risk box, check or hold. Thought strongly about the second position here. Was very conservative on this one today. I didn't like how weak this was in here. And I said, I had other things that were working on that long side. So it was real. I was content. Standard exit at the PSAR flip, check or hold. Kata 2 reentry, scratch. Thought about a second Kata 2, but it's already 3 o'clock. And there's only this much room left in the day. So there really wasn't time. And I wasn't going to hold this overnight. So I missed the move. But that strong finish bodes well for a continuation tomorrow. So we'll be ready for that one. Here's the Biotech. So this is XBI. This is one of those top 30 liquid and volatiles. So this was a nice gap up after the PSAR flip, but immediately started rolling over. So I'm just watching. And then that recovery. Notice how the RL10 quickly corrects and it hardly even bunches. So now when it breaks above the RL10 and the market is taking off, I don't mind taking that as a almost like a Kata 2 standard risk box. And let's go. Quick exit, quick re-entry on the Kata 2, standard work. Standard exit, missed the short, missed the second short, took the Kata 2 to the upside. So I'm not taking those short side opportunities because today was such a runaway upside. Felt like anyway. Fractional gain, and that was good for the day. Yeah, US Steel. Standard entry. Kept an R, gave back maybe too much, but I was happy with that. This was still very noisy. Kata 2. Capture what I can, bird in the hand. Kata 2, scratch. And it just didn't have as much juice as CLF would. CLF was a better trader today. The Russell, big gap up today. This was the biggest gapper of all the indexes. So I was wanting to do this one with particular attention. So here's the opening range 3. And there's that nice gap up that feels good. So on the second bar, when it takes out the opening range 3, enter, standard risk box. A no lose plus dinner for 2. Kata 2 reentry. Standard exit. Standard reentry. Nothing. Kata 2, try it again. Nothing. Just kind of petered out. So most of today in the Russell was that early burst one leg of follow through and then just kind of grinding. But to me, the important thing was that there was no sell off. So I think this is the key price level for tomorrow to be ready to defend around 177.50. We really want to see it stay north of that. ARE, this is at Alexandria Real Estate. This is a Godzilla leftover from 3 weeks ago that is just continuing to quietly grind its way north for us. Missed the entry. Probably would have scratched it. I was only interested in the long side. So I take the standard COTA 2. This feels like a COTA 2 to me. It's holding all of this. Here's the descending PSAR. I take it. Standard risk box. Kind of a quiet grind. COTA 2 reentry. Grinding scratch. There didn't feel like much follow through in this. I mean, it wasn't failing, but, and then I missed this is one I think if this wasn't a bear normal, I would probably have kept a piece of this one as a swing because I really like the way that it's almost like accidentally moving up. It's almost benign neglect, which means that all of the things that made it a Godzilla are gone. Like this is just quietly continuing to go up. So we like that I think that there's a swing trade in there waiting to be developed. Here was Tesla. Tesla was a tough one today. This one had the big gap up. Let me zoom in a little bit. The rest of the market was working well. The tech was working well. This one was not. So I wasn't gap up, roll over, falls through here. New low of the day. So there's that $5 risk. And now I'm looking forward to rejoin down to here. That first move down is solid. That's good. So by the time you see this thing come down to here and start to roll back up, close, then open here, I think you have to at least be here to capture this gain. You want to capture that gain and maybe give it this much wiggle room. That would not be offensive to me. Then that failed and broke down to the low. So this one is really crucial. It did not fail further. It closed here, opened here, and here's that PSAR. To me, I think I should be like right about here is where I want to be now. So that if this thing opens and starts to go back up, I'm giving back this much, which is about the size of a $5 risk. So I'm giving back one, and I'm probably keeping two. Check or hold. So this is probably +3 at the maximum favorable excursion. So give it one room, but keep two. That feels like an acceptable trade-off. And that's what it did. Then it could not get through. The fact that it couldn't get out of the dragon, could not get across the PSAR, but was starting to roll over. Now here's that quick collapsing dragon, short, Standard risk. And now when it's down here, it has cleared this. Might have put a second one, but this was span of control and it was already all in on the long side for the other stuff. So was content just to watch this thing fail. And now it's moved one, almost two. So now I got to be thinking about preservation. I should take about half that. Here's that bar right here. Could take just half of it and put half on and capture lock in +1. I hope it did that. Yep. And then it failed right away, but then reversed. So I had to give back a half. So that almost is starting to feel like the run is over on the downside. All right. So we're a couple R up on that one. I thought hard about that SSC. I just didn't have the will. If I had taken that there, that's a legitimate long. Here's where that RL10 crosses the baby dragon, enters the dragon, crosses the spine, leaves the dragon. As long as you're exiting north of that line, you're going to make money. So somewhere in here would be a legitimate exit, kind of like a no lose plus dinner for two. And then it's starting to find support here, starting to roll over. So maybe there's a kata 2 forming here. So that's just one. I didn't have the will to take it. It could have been a gainer, but I didn't have the will. I took the kata 2 at the PSAR flip just by the numbers. I was not persuaded by the strength. Like this capped out here. It did not get north. So that's just a reluctant kata 2 with a standard risk box. And scratch. Missed the short. Kata 2 reentry. There was a second failure to fail further. Did not fail. Hits the PSAR. Give it a try. It's Tesla. Why not? The rest of the market was doing well. Maybe this is Tesla's chance to catch up. Yeah, maybe. Feeling pretty good. Feeling very good. And that one paid off. So that's 1 unit of risk. That's about a 1, 2. This was the fact that it didn't fail here. That was a positive sign. The fact that it didn't come out of the dragon, that's a positive sign. That could have been, but we're already getting late in the day. So I'm just content to have one. Final one was XLF. Now it was a strong sector yesterday, and so I was prepared for this to do well. If as after the gap. Here's the gap that is holding so far, and the RL10 is hopefully starting to reverse. There's my entry. Standard risk box, micro gain. Thought about the kata 2, but that was, it wasn't really moving hard. The tech sector was better. If I had taken it, I should have scratched anywhere in that stretch. reluctantly taking a kata 2 micro 1R gain, and then there was no follow through in XLF after the big gap up. That's the only criticism I have for today's apparently big gains. At least half of the gains today were from the gap, and although there was some follow through, it wasn't runaway persuasive to the upside. But we'll take it. It was a good update. All right. Let's check the traders. Pawn had some WTI, the cash market, quick scratch, micro pay, quick scratch, got paid a little bit. Now starting to get paid on the downside twice. That's good. You know, there's that's 2R right in here in that whole sequence. A couple quick losses, a little recovery. So pretty solid day, pretty good week. And he's working on a 50 tick time frame on this one because the window of time was pretty narrow. That's like a 2-hour, or that's about a 3-hour iteration right there. In the DAX, there was had some trouble getting aligned on this one today. Looks like I like the PSAR flip short, quick out, quick reentry. That's good. I like getting paid, but when that fails again, I think we could be short here and we would get paid in here. I like getting paid. This was a I think short, quick cover, long side, re-entry that was good. That's where that breakout to the upside. So that would pay off instead of losing. Those are both good shots. So this was so close that missing this one and the slow re-entry is what tips that into a micro losing day. This is the euro. Like trying for the breakout, good re-entry. Oh gosh, that's probably +4. Good shots. Yeah, there's the second one we should have. We could have had that one too. So boy, they all look the same leaving the station. I'm wondering if that's a span of control issue. So this is Pon's first 50. And this is pretty good work for learning a brand new system, trading it in public with accountability. Best trade 2.6. I like that the worst trade was only -1. Slightly favorable win rate. The payoff is 6 to 5. So that's going to be positive expectancy. As we get better, this number is going to start rolling back up. Slow and steady, making progress. Tightly trimmed risk. Normal distribution between -1 and 2, and the possibility of fat right tails. Everything is looking good. He's starting to see the patterns better, and he's already positive expectancy, but improving on seeing the patterns. That's good. Yeah, some alerts. So like a couple of those today, like that 4-hour one that was missed was probably didn't have an alert. And then you're thinking about it. That's probably why slow to get in. Yeah. Trust the PSAR. Study Griff's Wu-Wei exit, which is in that trade station or the Thinkorswim platform too. The Z3P is almost always, I want to be cautionary here. The Z3P is just about always going to be in the Crocodile River because the Z3 lines have pinched so much because there was such sideways choppiness and the river is narrow. So that you don't take the breakouts from the river, you take it from outside the Z3s, but it's always going to be in the Crocodile River. That's why you got to wait for the Z3 pinch breakout and not just when it leaves the river. So just a piece of finesse there. Here's Tim back in the saddle, looking good. Good journeyman trading today. Quick scratch. This reversal might have happened a little sooner here, and then you get a better play. And this one exited early because it was under such pressure because the entry was here instead of down here. If the entry was down here, you might have stayed in that for that extra piece up. But then you would have exited here. So you're getting about the same entry somewhere around the VWAP. So, sometimes it just is what it is. I like the short here. I think the reversal could be here, or because this was down here and came back up, you might have reduced that loss. That's a good reversal. Great exit. Good short. I don't think this is premature because this is the key to sanity. This is just a false start that didn't cost anything, and you crush this. Now, this is where when we bring that over, the fact that held and did not violate and then started to break out, we might have gotten a second position here and paid off really nicely. But this is pretty good day. And you should be starting to feel a little more comfortable up around 600 trades. You've seen a lot of things. You've gone through a couple psychological cycles, and you've reacted to it professionally. So I think you should be cautiously optimistic. Here's Griff. Here's 3.25 just from the collapsing dragon on EWZ. He's been busy working up the details of his owl trading course. I may, once we get that thing rolling for sure and rolling, I may have him do a Kata 2 trading course because he's been just quietly crushing that one on Brazil. Luke. So this is your Z3 pinch. Here's the breakout. He doesn't start trading till about here though. So he gets 1, 2. So it's just the start of the second leg. So that's pretty good. I like the reentry here, but that's still pretty good. That happened so fast that we probably didn't have a chance to capture that. He just keeps firing, and then that's the one that left the station. That's good. Good quick reversal. 4.5. Yep. This is a lot of chop in the Aussie, but the moves that were there, he got. It's just there was so much chop. This is where, by this time of the day, we might not need to take 4 in a row. Maybe after 2, take a break. Just saying. Because we were still late getting in here. This was an emerging dragon instead of a Kata 2. Makes up for it though with Devin. Nice shot. And Tessa. We might have gotten a little yeah, might have gotten this one better and offset those other losses even more. So really good work today, guys. Keep going. You're doing fine. And we'll get this published and posted. Lots of news and stuff for you to consider. I feel we're turning the corner on the training courses and opportunities to learn. So stay with us.